Hello, 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 everyone. Mike Arnold here, co-founder, Path Trading Partners, along with Bob Iacchino. How is everyone doing today? Interesting day trading, interesting after hours with Netflix. Netflix down pretty big. Their subscriber numbers, which we talked about yesterday, that was going to be the deciding factor. Absolutely horrid. Absolutely horrid. Uh, Wavy, welcome. I think these high PE names are in for a world of hurt this season. They may very well be. They may very well be. Good afternoon, Davey. Good afternoon, Sashi. Netflix Netflix post is down 86 points, 25% roughly. Hello, George. Hello. So let's just get to the meat and potatoes. Hey, Ken, how are you today? Let me go over everything before we bring on Bob. I got to keep the anticipation building for somebody as superstar status as Bob Iacchino, who will be live within the next 2 minutes. So, by the way, let's see. Today we had Evan speaking. We had the building permits and the housing starts, as we talked about today. Tomorrow, we got a lot of mortgage stuff, existing home sales, more Fed speak. When are they ever going to stop speaking? Remember, oil numbers tomorrow also. That's at 9:30, along with the Fed speak. So that's potentially market moving again. Then you have the Fed beige book. All right, so we got that out of the way. You can see the note. Ignore where's Netflix? Ignore this because that's wiped out after hours. But you had stuff a little moderate bounce. Again, we've been waiting for this little moderate bounce, and we'll take a look at what it needs to really continue. Fed watch up to about 93%. Closing in, running out of that negative gamma. Remember, negative gamma amplifies the moves both up and down, but approaching that 0 point again. After hours, Netflix, IBM, Interactive Brokers, one of the brokers I do utilize. We already know Netflix just bombed it completely. We'll take a look at that chart at some point. What else do we have tomorrow morning? P&G, definitely going to be tuning in for that one. That's the big one I'm watching tomorrow morning. So if you want me to look at anything else, let me know. Let me know. I was just paying attention to see what the Nasdaq was doing after hours. And by the way, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term viewers, please come back, leave some comments, and like the videos, especially since Bob Iacchino is on. I hit the magic Bob button. Bob, you are live now?
I am live now.
Yes. Reading something. You're not in a Twitter war, are you?
No. I was actually I don't care what happened to Netflix because I mean that's the what I'm looking at now is Roku and Disney. Roku's down 7.25%. Disney's down over 5%.
So they're sympathy selling?
Yeah, I mean I guess okay. So it's just really interesting. I was actually watching when I was watching Bloomberg when the Netflix earnings came out, and I was noticing obviously we closed higher today in pretty much everything, and 2% in the Nasdaq, and we're giving up some of that in the Nasdaq futures post Netflix. Futures only up about 1.25% now, but the cash closed up about 2.15%. And I thought to myself, so okay, I still don't. I mean, I'm not bullish yet. I like the price action a little bit today, but I'm not bullish yet. I like that real yields are just on the verge of going positive. So that real yields, nominal yields minus inflation expectations, which reminds me, I want to see where the five year forward is.
Yeah,
You
why
guys
don't
don't know
you
what that is.
just go over again what real yields mean to people who might not know? Well, hold on. Let's say I got to say hello to Anna. Welcome, welcome, welcome. And let's see. We'll take some of these other Netflix comments once we take a look at that chart. But go over real yields again, Bob.
Yeah, so real yields is the nominal yield, which is when you look up what's the yield on the 10-year note. That's the nominal yield um, minus inflation expectations. So, for example, if the real yield is 2.5% and inflation expectations over 10 years is 3%, that would give you a negative real yield of 0.5% or 50 basis points. For those of you that don't know, I come across this a lot. when we're talking about basis points, 100 basis points is 1%. So when you hear somebody say 25 basis points, that's a quarter of a percent, right? So right now we're looking at five-year forward. So what does that mean? Five-year forward, it's hard to say. Five-year forward inflation forecast, something tracked. You can look at it on fred.stlouisfed.org. So that's the St. Louis Fed's economic data website. And what that essentially is 5-year inflation expectations starting today, going 5 years from now. Okay. So it's not starting from January 1st of 2022 and ending January 1st of 2027, which December 31st of 2027. It's 5-year inflation expectations starting today, moving 5-year forward. And they have dipped a little bit. And the last reading that they've got on the website, I'm trying to get to it, the 18th, it's about 245. Okay, that's the 5-year forward inflation expectations. And then if you look at where the 5-year yield settled today, it's 291. So that means that now finally the yield on the 5-year note is higher than the inflation expectations for the next 5 years starting today. So 5-year yields have gone positive, 5-year real yields. Okay, so the idea is that if you bought a 5-year note and you earned, what did I say it was, Mike, 291?
Yeah,
291.
I
And
had
you earned,
2, so yeah.
yeah, so if you bought a 5-year note treasury today and you earned 2.91% and inflation stayed at 2.5%, which is approximately where it was as of yesterday, it's not today's, but it's yesterday's, you would earn about 41 basis points after inflation. So 0.4% would be your real yield.
Well,
Does
go
that make
ahead and
sense?
take my money.
Yeah, just stacking it at that point, Mikey. Just stacking it. So anyway, I was watching the Netflix earnings and I'm thinking, so what is going to be the push down if there were to be one? Because I don't really believe today's rally yet in terms of it being, I mean, bear market rallies are awful. They rip your face off, right? And I'm like, okay, so I liked the price action today. I liked the volume. Do I think this was a bottom being made? And I don't. So they said, okay, well, then there's got to be another trigger. And I said, what if Netflix misses badly? They're expected to add 2 million subscribers. What if they only add 1 million? Well, they lost 200,000. So then that takes your mind to why did they lose 200,000? Well, they had a price increase, right? What else had a price increase? Everything. Every single thing in the world had a price increase. Food, energy, clothing, chocolate bars, which I guess is food.
Even my
Everything.
Taco Tuesday joint.
How could they raise prices for Taco Tuesday?
It's gone up. I can't. It's horrible.
That's ridiculous.
My Tuesdays have been ruined. So what? Everything's been raising.
Even though earnings have been pretty good so far, just kind of like in general, right? Not every single thing, but earnings have been pretty good. And stocks are kind of bouncing in part off of that. Well, here's an example of, and remember what I told you guys, what Mike and I told you guys, is that you wouldn't see it in this quarter's earnings. It would be next quarter's earnings that you'd see it. And I said, watch guidance. And guidance has been pretty good. Hasn't been bad. But we have such a tiny number of companies that have reported so far. What happens as we start to get into these consumer-sensitive tech stocks like a Nasdaq, like a Netflix, like a Roku, like a Disney, like a Live Nation, like an Uber? What starts happening with these? I don't know. I mean, this might have been a sign of things to come. It might not have been. Davey, that helps as well. Sorry, you got to put the comment up first. But
I canceled my Netflix because of their progressive programming. There we go.
That's why I can't quite cancel my Disney yet, but I want to.
Don't get me started. Don't, please.
I love Marvel so much. But go ahead. I'm sorry.
What else? So Netflix didn't even miss by much, just guidance sucks. That's one way to put it. Yeah, it's seven.
Well, it's subscriptions. Who
Yeah,
said that? Is that
that was
Wavy?
Wavy.
Yeah, they didn't miss on money. They missed on subscriptions. So this is the first time they've ever had negative subscription growth, ever in the
They've
history of the
missed on
company.
subscriptions, but this is the first time they've ever had negative.
Right. They've
Yes.
never had negative subscription growth before. They've missed on subscriptions in the past. The market is looking for 6 million. They had 5.8. That's happened before. They've never had negative subscription growth. Now, part of it is probably them cracking down on password sharing, right? But I don't know how that would be negative subscription growth. Still, you still need people to cancel the subscriptions they're aware of. And they also raised prices in a time of inflation when people are starting to go out more and watch Netflix less.
Yeah. All right. Well, Netflix, it went down to our next target. Again, I was talking to somebody earlier that wanted to know my thoughts on Netflix, and I did not have a play going into earnings. There was no great pattern. Uh, there was this little double that was far off from triggering. That would have been my only play if it had triggered to the upside, but to the downside, besides just holding support. And there was nothing. Again, you might, for me, it was sit on the hands during earnings because I didn't have a play. There was nothing, especially to say, well, was there any warning sign that it was going to drop, 25% after hours? The only warning sign is against the weekly rotation zone. And it went to the weekly rotation zone, tested the bottom, potential double, but it went lower. So at some point, there'll be a little potential gap play, possibly, at some point, but not tomorrow. So that's where we sit with that. You said, I just want to glance at those Roku. All right, Roku's off a little after hours. By the way, Roku, just to reiterate for everybody, that's Roku, massive double top from earlier on a weekly basis. First, second targets hit, trying to base at this second target so far. But again, you got the rotation zone coming down, and final target isn't back down to 58. So keep that in mind if you're trying to buy bounces in Roku.
Yeah, according to E-Trade platform, Mike, they're down 6.25% right now. Roku.
Oh, okay. And Disney, yeah. Disney also.
Disney was 5%. Is that more now?
I don't know. I don't have it in my quote sheet right now.
Here
Disney.
I got it right here.
It's not
4.8. Down 4.82%.
All right. I don't have the after hours up here right now, but it is lower at 125.46, breaking from a triple bottom. Also, a potential double bottom that's now invalidated. Again, I want to reiterate again to people, especially newer people, because you have a potential, if I say a potential double top, potential double bottom, it's just a potential. It's not a buy or sell when you have a potential. It is something to watch out for should it trigger. But it doesn't mean, I got a potential. That means I just buy, because that would be insane.
Yep.
You have to wait for these patterns to confirm at least. You don't even have to wait for, you just have to wait for a double to confirm unless you have a front run pattern, but front run patterns are pretty rare and they're front running. What else do you want to talk about, Bob?
Can you look at a Disney daily really quick? Because it
Sure.
might be a really good example. I didn't measure this out, but if you can put it up, that's trading view, right?
Yeah, this is trading view.
So I suspect the target exceeds what this giant sort of double bottom would call for.
Mm-hmm.
This giant potential double bottom. This is a great example. Just kind of briefly measuring it out. Yeah, even the 175 exceeds the move that precedes it, at least by my measure. But it would have to go up to that first move down right there. You couldn't extend it out to the bigger move because you'd be playing with extra patterns there. But as you look, this is the potential. Like this would have looked to many people like, okay, we've got a double bottom going on in here. I would have looked at this more as a triple bottom, but the short-term double bottom could theoretically work if that move had started a little higher. But now as you look at it being down 5%, again, had you front run this, thinking, okay, we potentially have a double bottom here, yeah, you'd be smoked because it's probably, if it continues on the path it's on, it's going to violate our rules even for a potential double bottom
Yeah,
because the
because
right hand low is going to go too far.
right, and the potential did just eke in right there.
Okay,
You
for
see,
the
the
first
second
target.
target is right at the candle body, so it was
Okay.
still a valid potential. That's why I had it on the chart before, but now it's wiped out with the drop
Yeah.
lower. But this is
Yeah,
where
it's
just
down
because you have
5% now. It's all the way down trading right now, 125.46. So it's pretty far. It might have fully exceeded
I'll
the
have to double check.
parameters of the healthy double.
Yeah, I'll have to check that a little later, but we'll
Yeah, no rush.
keep an eye on it to see if it is. Uh, so that's what we have with that. What are other? We already got your take, so it'll be interesting with this Nasdaq pullback to see how strong this rally. Again, this is a short-term bounce for me, and then another rollover play. I'm still watching the cycles aren't yet at the top, so we could still get some limited follow through. Nasdaq might be hindered a bit, but we got a bounce in the S&P, Nasdaq, and Dow today. S&P up 124 basis points, Nasdaq up 132, Dow up 135. And we had some great patterns today. Did you see all those patterns today, like in the spiders? Uh, just recap. These went out. Sterling's been posting them on the Twitter, but look at the play with the here. I just have it on a 1 hour. Look at this with the spiders.
Mm-hmm.
Double, boom, and then the next harmonics. The cues, boom, pause, pullback, next harmonics, and I don't think I have it on the diamonds in here, but IWM, I think there's also, yeah, this one through the target right at the top here, and then to the next harmonic and stalling out. Interesting enough, there is a potential double top on IWM now. So all right, we already went through did notes again selling off. So here's another example. We had a potential double, never came anywhere close to triggering. Rolling over, hitting the next harmonic lower. 118.28 is the next level down. What did we finish at? 118.27 was the low. 118.28 was a close. I think that's a pretty good hit on that. Next target lower is 118.13. Should just keep going. Hey, I have a question for you, Bob. Based off what's going on with the yen? What's with the laugh there?
So we're getting to the point where the yen carry trade could come into play. All right. So obviously this is a central bank move, right? It's a central bank based move because Japan, Hirohiko Khashoggi. I was just watching that dissident documentary yesterday. Hirohiko Kuroda, who's a Bank of Japan governor, basically said last week that the way you fight deflation is by keeping rates low. And the way you spark an economy is by keeping rates low, and they still need to do those things. He also said the way you fight inflation is by keeping rates low. He literally said all sides of it is by keeping rates low. So he
How
did.
does it work exactly?
I
So
don't
you
know.
just have to always keep rates low?
Yeah, literally, that's what he said. So this was in the face of Bank of Canada, 50 basis points, Royal Bank of New Zealand, 50 basis points. The rate hikes, obviously. U.S., we're now at 93%. Anytime we get above 90, it's almost a sure thing that that's going to happen, 50 basis points. And Bank of Japan is like, no, we must keep rates low. Now, it's not that they mind a weakening currency, but they're going to have to do something soon because when it weakens this quickly, it actually hurts the structure of their economy tremendously because they can't buy anything they need to produce the things that they need to export. So they need these things to move a lot slower. This last move right here is going to be very troubling. You're going to see some commentary trying to kind of tamp that down now. But this is just a situation of a constantly weakening currency simply because the central bank is not aligned with every other central bank in the world to a certain degree, including the ECB. At least the ECB is going to end their AAP and their PEP program, the APP, sorry, and the PEP program. At least those are scheduled to end. While they're still going to reinvest proceeds, they're not going to be buying anything new. So they're out of touch with the rest of central banks, and that's really what's going on there. And there's not much more to it than that. But they will likely talk it down, which will probably bring the relative strength indicators down a little bit. But unless something structurally changes in their approach, it's likely to coil and go back up.
How does this affect their bond purchase programs?
Well, it's funny because we talk about China having the most U.S. treasuries. They don't. Japan does. Japan has about 1.9 trillion. China has about 1.7 trillion. So Japan is just going to continue to purchase U.S. assets, and they will print money to purchase their own assets, in which case that'll weaken the yen even further. They can pause that program by selling some treasuries in order to generate cash to purchase. And that's likely what they're going to do. They'll flood the market a little bit with dollars, which will strengthen the yen a little bit. But unless they completely change their policy, they can't stop doing what they're doing. So it's only going to be a temporary thing. And what they're likely to do is sell a little bit of their U.S. assets, try and talk the yen down at the same time, and then resume again the same path, just to try and slow the fall of the yen down a little bit.
Is there any point this gets very, very painful?
It's getting close now. I mean, if you just look at where we are relative to history in the yen, we're at like 2009 levels. It's bad. Wow, more than that, 2007 levels.
We're actually at levels
Worse than that.
since 2002.
Yeah. So if you think back to what happened in the late 90s to Japan, basically their economy crashed. So the yen carry trade, for those of you that don't know, you borrow in yen and then you lend in dollars because of the interest rate differential, and you hope that you don't get crushed because you're getting paid in yen. I'm sorry, you have to make payments in yen. So as the yen weakens, you lose money on that trade. It's called the yen carry trade. It's one of the oldest trades in the book. The strength of the dollar is going to be crushing that trade, and that actually will hurt institutions. So it's pretty bad. It could get pretty bad. I think we're getting close to that point now, to where you're going to see some of the unwind of the yen carry trade, and that'll be ugly.
Rich says the recent depreciation of the yen, partly due to BOJ's powerful monetary easing, comes as higher energy and commodity prices are casting shadow over the economy.
Let's just say you're importing inflation, and there's already inflation, right? When you have a weak currency, you don't not only have domestic inflation, but you're importing more inflation than is already in the system. So it's crushing economically. It's really bad. They need to get on board with at least calming their accommodation for a while to try and get the yen under control. And that's what I suspect you'll see.
Christoph, hello, joining a bit late. Glad that Futures Edge is back. Really great content. See, here's the most important question of the day. We'll share and recommend it. When's Mike on?
So Mike is going to be on in May, although I haven't told Mike that yet.
I didn't know that.
So we're booked. Guests are booked up through April 29th. April 29th, we've got Ryan Dietrich from LPL. He does some really great stuff on Twitter. I've talked about him before. 22nd, we've got Carol Roth, who's probably as much political as she is economic. She wrote a book about crushing of small business and how the government's been crushing small business. Her and Jim might talk more politics. Jim does all the interviews. I don't interview anybody. I come on afterwards and do trades. So what I want to do is get an entire future segment with Mike where Jim and Mike just talk about the technicals of a trade, because Jim and I come up with trades prior to the guest being on. And one of the most fun things is going to be Jim going through the whole basket of futures and asking Mike what the technicals look like. And then afterwards going, shit, I've got a trade that Mike doesn't like here. I might want to stop that. So that's going to be a fun episode, probably the middle of May, but it's always on a Friday, always released on a Monday, as long as the editing gets done.
So once you run out of real guests, then you'll put me on.
Well, we're trying to build a following first, Mike, and
I'm just joking.
I'm just saying.
Oh, great. We don't have anybody for this week. Let's get Mike.
Let's get Mike. Actually, I want you to put on a funny costume for the thumbnail, Mike. That's what I'm looking for.
I can do. I
At
will try.
least a tie dye shirt. At least.
I can do. I'll put on a green tie dye shirt against the green screen, so then you'll see my body just floating there.
Stupid ass.
Sashi wants to know when the big flush comes in the Nasdaq.
Sashi, it's like porn. I can't describe it to you, but I'll know it when I see it.
See, this is the whole thing. I've done, and you guys know I've done a lot of research with systems, long-term systems and everything else. And as I've talked about, I have multiple long-term systems that don't trigger that frequently that are all for continued down moves. The one thing, now this tie-in, one thing I found is once you go farther than a max of about 8 weeks, the predictive timing, that's why I don't give specific timing. The predictive timing goes out the window. So for shorter term systems, within an 8-week period, you can somewhat come up with, all right, this should happen within like 3 weeks, 4 weeks, blah, blah, blah. Once you get to these long-term systems, I have never, ever found one with reliable timing that you can trade off the timing that has statistical relevance. Okay? And I've looked at hundreds of them. So, my biggest thing is I just watch for the historical big down months. But does that mean it has to happen during those months? No. That's why I can't say, look, I have long-term sell signals. Can I tell you it's going to happen within the next 4 weeks? No, I can't. Could it happen within the next 4 weeks? Sure. But why I don't throw out timing is because it's not statistically relevant. And I'd love to see one. I've actually met other very strong systems people and system developers, and I've not met one person. If you can introduce me to somebody who has it and that is statistically relevant, not that they just think that, or the last time it happened, they called it was going to happen within a couple weeks and it did, but their timing model is statistically relevant, I'd love to meet them because I've never met one system that has had it that extends beyond an 8-week period.
There are people that trade the seasonals of the market, but I've never had much luck researching that. And again, like Mike said, we don't really look and say, I think it's going to happen between this date and that date. We just protect ourselves against it when the conditions are such that things look weak. That's really it. So saying when is it going to happen, Sashi, it may not happen. Keep that in mind as well. You say when the big flush is coming in the Nasdaq, we may not get one. All right. There may be some event or the Fed may all of a sudden say it's too dangerous to asset prices and start buying assets again. And we may not get the big flush. Eventually we will. But you remember when we talked about it, I've told you guys a bunch of times that I said at the beginning of the year that I thought we were going to get 38 to 45% move down in the Nasdaq this year. If not, it was going to be because the Fed lost their nerve. And then they were going to come back and start buying again. And then the next one would be much bigger. But that next one could be 2025, 2026. I don't know.
Again, I'll just throw this out there for anybody new. You want an interesting read, and it does have tie-in with the markets, but it's not about the market. Look up the book called Ubiquity. Mm-hmm. That's a fascinating read. It's about how, the longer you postpone stuff, it's done all with sand and building these piles of sand. And the longer you postpone instability events, the larger the instability event eventually becomes. And there are major tie-ins with the market. So that's a great read for anybody who wants to. And it's true in a lot of areas that they've studied with So the book's called Ubiquity. I don't have the author off the top of my head. Bob, how will the Canadian CPI will affect the loonie?
So it's more about what the Royal Bank of Canada is doing, given the inflation in Canada, and they're doing what they should do. They've hiked rates. They're ahead of the Fed, although they're going to be even with the Fed next month. They missed a golden opportunity. Of the last two Fed meetings, they only raised, the last three Fed meetings for the Bank of Canada, they only raised twice. They should have raised all three. I don't like the Canadian dollar here because I think crude oil's volatility and weakness and some of the other potential short-term weakness in commodities because of things like the IMF cutting growth, China being locked down. Now the courts are forcing the Biden administration to sell some more leases, although they raised prices on drilling now and taxes on drilling. But, they're just trying to go around it any way they can. But you could see some further weakness in commodities. Probably short-term weakness. I don't think it'll be long-term weakness. But short to medium term, I don't really like the loonie. That could change. But it's not really a direct effect of CPI. It's the fact that the Bank of Canada is a little bit behind the Fed. If the Bank of Canada got ahead of the Fed, you'd probably see the loonie strengthen. That's really what the relationships in currencies are now. Mike, there's a couple of comments about the 700,000 Russians. Netflix, can you throw those up? Because I've actually got something to say about this.
Yeah, Davey put out Netflix suspended 700,000 Russian subscriptions.
There's one more in there from Eric.
And then Netflix pays a high price for censoring the Russians.
So keep something in mind, guys. When you see something like this happen, the obvious is not what's happening here. Okay, and again, part of the reason Mike and I trade price action. Okay, Netflix had already dropped, right, from somewhere around 302 or 380 to about 340. All right, and the analysts had adjusted for that 700,000 number already. Netflix was supposed to add about 3.5 million subscriptions about a month ago. They dropped it to 2 million in the expectations. Okay, they already adjusted for the Russians being taken out of their viewership numbers. This is not that. Okay, it's not that. Remember, they're down by 200,000 subscribers when they were expected to add 2 million. Netflix and all the analysts know about the 700,000 Russian accounts. We're not the only ones that know about that. As a matter of fact, we were the last ones to know about it, right? So don't look at this and say, this must be the Russian thing. It's not. It's way more than that. The analysts are aware of it. Netflix is aware of it. They talk to the analysts, especially coming up to earnings, on an almost daily basis about what's going on. They can't legally say much, although maybe they do sometimes. I don't know. This is not the Russian story. This is more than that. This is the price hike. Somebody put in there that Netflix is $1 Canadian a month in Canada. That's amazing because it went from $12.99 here to $16.99 a month. And we already have inflation, so people are actually canceling Netflix. This is not the Russian thing.
Well, there we go. Any other thoughts before we wrap this up and I go over some price action stuff?
No, go ahead. I really just wanted the last thing I want to talk about is crude oil.
Crude. Yay.
Yeah, crude got smacked today pretty good. But when you look relative to the last 4 days, we're up 13.02% in those last four sessions there. Okay, and today we lost about 4 3/4, somewhere around there. So it's not that dramatic of a pullback, and it's a pullback right back to the rotation zone, which is not really fully developed rotation zone, right? It's not really angled up yet or anything. In the podcast, I gave a trading example, and we were trading 106 in the podcast, and I said I'd buy, I don't remember the exact price, but it was in the 90s. Okay, but that's because you couldn't buy the run up, and I needed to pull back to get risk reward okay, right? So it still didn't pull back enough for me to buy it. So I don't look at this as much of a pullback. But when you look at it, the Biden administration lost a court case basically yesterday, and they now have to go back to regularly scheduled lease sales, which are law, that they have to do that. And you might actually get some excess drilling. This move we had today in crude oil is likely speculators panicking out of that because they think all of a sudden there's going to be all this drilling. OPEC Plus is 157% compliant to their production cuts. Well, what does that mean? They're producing way less than they're supposed to be producing. Okay, they're still under a production cut agreement. Okay, Now, lately, you've been hearing in the news that they've been allowing more production to go through, but they're still under the overarching theme of a production cut within OPEC Plus, and they're compliant to that cut at a level of 157%. That means they're underproducing by 57%, by about 1.47 million barrels a day. So supply is still very weak in here. And I suspect we'll see crude oil stabilize and then likely go higher, which could help the loonie a little bit for Rich, who asked that question.
Rich says, because of the IMF meeting, IMF cuts global growth forecast for 2022.
I don't disagree with that. I think that's why all commodities were down, but like they're late to the party. Literally everyone has cut their global growth forecast. IMF was the last one to do it. But yeah, I would agree with that because that's part of the reason that I gave to the CME group about copper falling. Part of the reason. But anyway, that's all I had.
All right. Then I guess we will see you again on Thursday.
Yep, Thursday or tomorrow morning if something crazy happens.
Okay, well, I'll be here at 8 a.m., so let me know if you need to jump on.
All right.
Okay, thank you.
Cheers, guys.
Small Mike is there. Small Mike. There we go. So, by the way, the price target I had today was like this 102.35. I talked about that in the market preview segment. Where are we in the ARC gap game? Well, we are favoring the downside gap fill first, even with this bounce. So how am I getting to that? Because we closed below the 62.5, so it favors a retest of this level, the 87.5 to 100%, and the gap is right at that 87.5. So I'm sticking by. We're going to have to fill to the downside before we fill to the upside. I'm sticking with it. There's the ARC gap game. So where else do we sit? It'll be interesting to see tomorrow with this rally if it fizzles out with the Netflix or if it's going to shrug off the Netflix. I mean, with the VIX again today, little bounce at the very end, but you see here closing just, I was keeping an eye on this, closing just above that 62.5% retracement. But it does work. Well, how'd that get off? Hold on. My levels got off. There we go. Closing above the 62.5% retracement. So I was watching to see if this, but no VIX confirmation for a continued fall just yet. So a little bounce at the end you can see here with running right, with the Netflix stuff coming out. A little rush like, are the markets going to roll over? Let's take a look at the price action today. Let's take a look prepare for overnight trading. You see everything sold off with the Netflix reversals. So what are we watching now? Let me update the levels. Just missing out on that next harmonic, but close enough for this. If we continue, my first overnight key resistance is 44.60 area. Above there, I'll watch for retest today's high, 44.67, 44.81, then major cluster area, 44.93, 44.94, 44.95 is one of my major targets should this rally continue. On the pullback basis at this point, I am watching the minor. Let me get back to the 1 hour chart. Overnight, now I'm watching anywhere between about 44.28 to 44.22. Should it continue lower? And then my major line in the sand is 44.13. Now remember, if you're playing along at home, where do we really watch for the rally to fizzle out? Put up your harmonics. We changed the color here. The major line in the sand would be 43.97.25 on a closing basis below that. So a daily close, you could do it on a 4 hour close for advanced warning, but it's specifically a daily close. for the highest probabilities. That would favor a retest of the lows and most likely a break lower, because this would be a failed bounce rally. It's going to be really interesting to see what happens in the morning tomorrow, whether it can shrug off this Netflix disaster and continue, or if it's going to just be a precursor to that was it. That's all it could muster. Nasdaq, you can see the big reversal. Key levels here. Let me do this also so everybody knows what it is. Key line, the sand for Nasdaq is about 13,922, 923 area. What are we watching for overnight? My major area I'm keeping an eye on is about 13,985 to about 14,17. That would be my pullback basis. And again, you don't want to see that at least a 4-hour close below that 13,922, 923 area. To the upside, if we push through tomorrow from today's highs, 14,243, and we will recap this tomorrow morning. Pretty significant resistance at 14,275. Then we have a harmonic cluster, 14,306 and 14,370. If we rallied above that, my major target for this continued bounce is 14,500. That's 14,499.25 based off the harmonics, so 14,500. Dow hitting that harmonic cluster and backing off. My key support's coming in about 34,610. If we did drop below that, I'm keying off of 34,500. To the upside, we can now, with this little pullback, since it hit that first area, we can do the next area, 35,009. So 35,000 and the spike high. Do not ignore that one on follow through tomorrow, then 35,121. Russell, back above that 2026. On continued rally tomorrow, I'm going to 2046. On pullback, I'm back to 2005. DAX still sitting in this sort of channel right here. It's really got to get above 14,300 before I target about 14,470. And key supports coming in about 14,000. Already talked about crude today. It hit that target I mentioned this morning with that 102.30 area. If we pull back some more, hey, take off this channel for right now. If we pull back some more, this is where I use the next harmonic of 97.62. But the flat 50 would be about 99.78, and that's right around that 100 mark. So that would be my short-term target. On a minor sell-off, on a significant sell-off, would be 97.80, 97.60 area. Gold, again, commodities got hit. Gold, I was watching this 1967 area through that to the bottom of the rotation zone. If we continue, then my next major pullback area is back to, again, I can't stress this enough. This is why you trade around a core position. My next major pullback area would be 1929. Minor would be 1940. Major would be 1929. Silver, big reversal today. Rotation zone and harmonic. We break below that. My next target is 24.95. We already went through the notes. Next target is 118.04 to 118.13 area. Dollar index still strong. Has not been able to hit that next harmonic 101.08 to 101.15. So that's where we sit. Let's check in at Tesla. Remember, Tesla earnings after the close tomorrow. We have the horizontal targets that triggered to the upside. So the next target for tomorrow is 1046.42, 1058.37, 1070.31. And then we have earnings, and your guess is as good as mine. It's Tesla. Nasdaq double bottom on the daily chart. Nasdaq double bottom on the daily. There's no double bottom here. There's no double bottom here from the way I do it. So nothing for me to trade from a double point of view from there. There was the doubles on the Qs today. Again, this just eked into a double bottom pattern right here. And you see we hit all the targets, and then the next harmonic just missing that final harmonic target to the upside. So that played out very nicely on the Qs. Oh, and also went through this real quick earlier, but here was your spiders. That was a really nice double right here. Stalling out this 443.85, pulling back to the rotation zone. And you know, I shifted that after the going into lunch, and then a rotation up, missing the final target, but hitting this 44.87 to the upside. So that was another one that played out really nicely. Will Netflix recover? Let's get to the bigger picture in this. So Netflix, let's see. I mean, my next target area that you don't want to break is 237. At some point there'll be a gap play. I think on any partial gap plays, unless it gets above that 62.5% retracement level, which we go over, it's to be sold. 283 now would be the first level of resistance. But this is very key. This is very key level. You don't want to see a trade not only through price action. I'm longer term bearish still on Netflix, but look at this. You get down. Here's this key line in the sand with Netflix. Because you get below this area, this harmonic cluster, and that area, then you're down into this. And that could be very, very painful. I think there'll be some people who try to buy the gap tomorrow, and you might get a little traction if the Nasdaq keeps moving up, but this is an awfully big gap to fill. And on a weekly basis, you're against the rotation zone. So rotations up towards that are to be sold. Daily basis, you're against the rotation zone. And now your major areas. So again, any big moves up are to be sold now. Your key resistance levels. Yeah, I'm just looking for a significant level. If you bounce up now, it's roughly 300. If you get through 383, 300. I'm going to have to see. We'll peek in tomorrow morning once it does. I'll peek in tomorrow morning once it does open. And we'll probably put on the Twitter feed, which is at path_trading, what the gap fill harmonics are for tomorrow. But I am not bullish on anything long term with Netflix yet. Netflix will not recover anytime soon. Netflix is just a bubble created by the pandemic. I would not disagree with you, Rich. Check out Vail. Still closed above the 62, but now below the daily 50 and inside the weekly rotation zone. I'm short. Vail. Longer term, we still have this double in play. Short term, let's see, which gap are you? You now have this potential gap to the downside. And below this 50 and below the 62.5. So this is going to favor that gap fill. And also, if you just look at this whole run up, it's right at the 62.5. So once you get your daily close below that, you could see a potential continued lower price action in Vail. Just because you've been putting it out, Sterling, again, big shout out everyone to Sterling, who's putting some stuff on the Path Twitter account with stuff he's looking at, stuff I'm looking at. Let's just check this. I just wanted to point out to the newer people. AMC, by the way, we'll have to see how this plays out. Did this close? Did this close? What would we have the high here? I'm just seeing if it did on a closing basis. 118.69 says close, 118.68. So the double's confirmed but not triggered. But for a continued follow through on AMC, we got 1958, 1999, and 2041 to the upside. So going to keep an eye on that. because I got asked, is this thing, by the way, we still, for even with this rotation back up, longer term topping pattern in GameStop, it would really require a strong move up. Would not be surprised if we get some follow through to see it hit this 200, but we're getting to cycle topping area, and we still have not hit the second and third target on that. And then look, look how good I am. Look at this. Meme stonks. I got meme stonks. ATER, I wanted to point this one out, and I do not trade this, but with the harmonics, do they work in this? The harmonic pausing bar here gave 721 as the next key level higher, and there you go. There you go, your little spike up to it, and then the reversal move. So yes, they do work. They can go overshoot, though, especially if there's squeeze plays in them. Coming back to this 25% harmonic, if we do fall lower, the next support area is back around 525, 518 to 525. What else do we have? Yeah, Roku. We looked at those at the beginning. Roku and Disney. I'll just, for anybody turning in late, sympathy trades. Roku, and by the way, Roku, I am not bullish on at all. We came down to this major harmonic cluster and the second target from this massive topping pattern. This is a massive topping pattern that was triggered back in November. Second target finally hit. Remember, these can take a long time to play out. I'm still watching for this to roll over again at some point, get down to 58 area. Okay, so, and right now trading 109. So we've had these targets. These targets were in place, I mean, back from in August. And then it was finally confirmed in November and then triggered. And look at this. First target hit. Little rotation back to the weekly rotation zone. Second target hit with a harmonic cluster right there, finding support for a few weeks. Look at this. And now down after hours. There's your next target, 58.10 on Roku. Disney, don't have anything with Disney right now, but it is against a daily or a weekly rotation zone, daily rotation zone, weekly rotation zone, triple bottom, which favors slightly a continuation pattern. Continuation pattern would be lower, and now breaking down after market. I actually think there could be a potential gap play, an interesting little gap play with Disney, either tomorrow or the next day. So I will be watching that. Again, if you want a little preview, we're at 124.90. So in order, I don't know where it's going to open, and that's how you have to do it. But if you're doing it, do it from the close. If we were going to 124.90, let's just say it opened there, I would be watching for the move back above about 129.20 and then target the gap fill play. Now, if it opens lower or higher, those levels are going to change. But I'm actually would not be surprised to see Disney on a bounce fill the gap, at least in the next couple days. And long term, it's still not bullish. Even on a move back to 144, still not bullish. Key line in the sand, though, really watch to see why. Because even on this play, once we get a key close below this 62.5% harmonic, coming in roughly about 125.50, it then favors much lower price targets over the next few weeks to months, even on bounce plays. So does that mean it has to drop here instantly? No, but rallies in my books are to be sold. Roku is now Broku. Nvidia. I looked at Nvidia earlier today, and I just, here's the problem. You still might have a little gap play here. But this is weak sauce price action still. You're against the rotation zone. There might be a gap play at some point. It's just too much overhead resistance unless something happens intraday for me. Again, with all this bottom, I'm focusing not more so we might still get a continued little push higher. I'm more worried once it breaks down below 207.85 area. And then, especially if we get a close below 202.50, not good. So anything on these upside's limited. Downside could be much more exposed on Nvidia. That's where I am very cautious. Take us through some of the cryptos. Let me just look at, then I got to wrap this up. I'm just going to do the majors. Again, we had this double trigger and couldn't even get to the first target and then sell off. It is still technically in play, but I can't get bullish on Bitcoin again until we get above 44,600. Everything else is just a short-term bounce. So by the way, this is not a little mini double bottom. Your intermediate targets, if it continues to bounce, short-term 42,211, and then major target would be 43,406. Ethereum, again, not a double. Also a double that triggered earlier, could not get to the first target and then sell off. The double still is in play. My major target right now, short term on this, should the rally continue, is 32,231. Major level to tip me back into bullish mode is 33,17. Other than that, it would be looking for a short pattern for another rollover play. With that, I am going to wrap it up today. Need to go do some things. So we covered everything major. Thank you for watching, everyone. New viewers, please do consider subscribing and liking the videos if it did help you. Again, big shout out to Bob, who spent some time with us. Hope you got some insight and some questions answered from more of a macro analysis point of view. And I will talk to everyone on the market open tomorrow. You are welcome, Wavy. You are welcome, Sterling. See you guys tomorrow, 8 a.m. Central Time.